What is the most important factor in a trade besides price? Yes, volume. So today we're going to talk about volume distribution, or chip distribution. There are two kinds of trading volume. The first is the well-known trading volume, vertical distribution. Each candlestick corresponds to a histogram of trading volume. That is, trading volume represents the number of trading volume within a certain time range. And then, there's the volume that's more important to us, which is the lateral volume distribution, or the chip distribution. Because the distribution of trading volume represents in which price range, or price level, there is resistance or support, the price may rebound, may break, and the distribution of trading volume determines the strength of breakout. In TradingView, we open metric settings, select the third category, technical metrics, then volume profile, then the second, click open metrics, and we see the volume distribution. First of all, we can intuitively find the red horizontal line. It represents the day, is within 24 hours. The highest volume of the price level every day is marked with a red line. And then we see the histogram. It has some differences. What difference? Some with dark marks, some with light marks. What's the reason? This is where the parameter settings for the metrics come in. So let's turn on parameter settings. First, there is the distribution size of the histogram, which is the width of the histogram. 24 means that the distribution of volume on each day is divided into 24 regions. So let's say we change it to 12, and you can see that the squares are getting wider, and then we get a much more rough distribution of prices, and we'll use the default of 24 for this parameter. The second parameter setting is a concentration percentage of the volume. 70 here represents 70%. When we set it to 70%, the dark area in the volume distribution diagram represents that 70% of the volume of the day is concentrated in this area. What's the point? Most importantly, when volume distribution is very concentrated, this price level is a very important support or resistance. For example, on this day, the volume distribution is very concentrated. 70% of the volume is concentrated in 1/3 of the area, that is, above 1.096. Then we can immediately mark a resistance to this area. Obviously, this area has not been touched in the following trading days. So this is a very important resistance price, which needs to be focused on later. Whether rebound or break, this is going to be a long, short watershed. Secondly, as mentioned above, the more concentrated, the greater the reference. On this day, for example, the 70% concentration is very broad. That is, there is no way to tell from the 70% concentration where the volume is concentrated. So on this day, perhaps the volume distribution for trading reference significance is not so significant. Let's talk about the specific components of this indicator, including the official recommended usage. We open the Help Center, enter the name of the indicator, and come to the volume distribution details screen, which is defined, followed by a description of some key parameters and some official recommendations on how to use them. Finally, it is the description of indicator parameters. If you want to have a more specific understanding of the indicator, you can open the official document for further review. So the volume distribution is one of the most important factors in a transaction, and it's a very good choice whether it's used as a trading signal alone or as an auxiliary signal.